Good morning and welcome to Elville & Associates' first webinar of many for the year, Maryland Able, a savings tool to promote independence, financial stability, and quality of life for people with disabilities. Presented by Maryland Able's Outreach and Communications Manager, Kelly Nelson. My name is Jeff Stauffer, Community Relations Director with Elville & Associates, and I'll be moderating today's event. So how does it work today? If you're new to our webinars, if you are, welcome. We're glad you're here. And if you're returning to see us, welcome back. When you have questions, please note them in the questions panel on the right-hand portion of your screen, and we will take time throughout the presentation to address them. And don't be shy in posing your questions. Your questions really help the presentation and add value. They help others learn. You received the presentation by email for me to take notes on it if you wish yesterday. So if for some reason you didn't receive the presentation, it is currently in the section marked handouts on the right-hand portion of your screen in the panel, so you can download it at this time. For our professionals on today's webinar, for CFPs, CPAs, and others, you may receive 1.5 continuing education hours for attending. And per my attendance records requirements, please email me your ID number. And for CFPs only, I also must have the last 4 digits of your social security number as soon as possible so I can submit your CE hours for approval. Everyone will also receive a post-webinar feedback email right after the presentation, and we ask that you please take just a minute or two to fill out this very simple survey to offer us your feedback about the presentation. Here at Elville & Associates, we work every day with clients and their families with the ideals of client education, collaboration, and compassion in mind. We're always available for free consultations to discuss your planning needs and want to be a resource to help you create a path forward for your planning. So please contact me anytime with any questions. So I'd like to take a moment to introduce today's presenter and longtime friend of Elville & Associates, Ms. Kelly Nelson. So Ms. Kelly Nelson has worked in the field of disabilities for more than 30 years. She has served in many roles supporting people with disabilities and their families through advocacy, education, and connecting them to vital resources within their community. As a parent of a child with disabilities, Kelly is passionate about helping her daughter become a confident self-advocate as she pursues her goals of working and living independently in the community. As the Outreach and Communications Manager for Maryland Able, she is delighted to have the opportunity to connect with many people with disabilities, their families, and the staff that support them as she travels throughout Maryland, educating people about the benefits of having an ABLE account. Through her outreach endeavors, Kelly is excited to see how her work with Maryland Able is helping to promote personal choice, independence, and economic stability for people with disabilities. So welcome, Kelly. It's really great to have you back. We've been working together for about, I guess, 7 years at this point, and it's always great to start off the year with our presentation with Maryland Able. So, but before we get started, we're going to start off with a very brief poll to get everyone comfortable with participating, and we'd like to get an idea of what's brought our attendees here today to learn about Maryland Able. So we're going to start off this poll, launch it, and the poll is: how familiar are you with Maryland Able accounts? And the options are: I have an Able account and I'm here to learn more. I've heard of Able accounts and I'm here to learn more. Third, I want to set up an Able account and have questions. And lastly, I'm an advisor here to learn to better serve my clients. So make the choice that best suits your situation. We appreciate you being here, and then we'll get started. Okay. Boy, a lot of people have already voted. Okay. So 19%, 18% say I have an Able account and I'm here to learn more. 50% say I have heard of Able accounts and I'm here to learn more. 4% say I want to set up an Able account and have questions. 29% say I'm an advisor here to learn to better serve my clients. So we have quite a varied group here. Kelly, I'm going to go ahead and make you the presenter. Whoops. You should see that button pop up.
There we go.
There we go.
All right. Well, good morning, everyone. I am delighted to be here with you guys today. And I want to thank Jeff, our wonderful host, who is having us here today and who plans all these fantastic sessions for the Elville webinar series throughout the year. And I truly am excited to be here doing their first webinar for 2023. It's also Maryland Able's first webinar for 2023. And if I seem excited, it's because I am. I truly am very passionate about Able accounts. As Jeff did share with you, I'm also a person who has some practical real life experience with Able, as I do have a daughter who has multiple disabilities, who's had an Able account for the last 4 years now. And it's really given me an opportunity to see how she has developed some, financial literacy skills, independence, and just built some self-confidence utilizing it. And it's also been a really good way for her father and I to begin that planning process for her future. It was actually the first step in our journey, actually, was to open an Able account. And then, a little while later, we added to that plan a special needs trust. So we've had some opportunities to see how they really work as collaborative tools. So my plan today is to share with you guys an overview of Able legislation, so you kind of understand how Able accounts work and the eligibility process and account management, just from a national perspective. And then to really hone down on some of the features that are most beneficial to people, or why we hear that a lot of people are interested in opening Able accounts, and then to focus on some of the features and benefits that we have here with Maryland Able. These are things like the tax advantages that we have within our program, as well as our savings and investment options. So we have lots to cover. And for those of you who are returning, I'm glad you're here, because we have had some updates to the program that took effect in January 1st. And we also have some new things coming. So it's a good time to join the webinar and see what's going on. So let's go ahead and get started. What I'd like to do is just kind of move through some of the presentation and stop at transition points. So anywhere along the line you have any questions, go ahead and put them in the chat, because I will be checking in with you guys to make sure we answer things along the way. And so here we go. So let's take a look at what Able accounts are. Basically, they are a way for people with disabilities and their families to save money without jeopardizing those critical state and federal means-tested benefits, things like SSI and Medicaid and waiver services. So for people with disabilities who have been receiving SSI benefits, it's a wonderful benefit to have, because it comes with Medicaid, which is the health insurance, but it's been a challenge in a lot of ways as well, because there's been this $2,000 asset limitation, which has made it difficult outside of a special needs trust to be able to have money over a $2,000 limit. So thankfully, due to the advocacy efforts of a lot of families and people with disabilities and service providers, and under the leadership of one particular gentleman named Stephen Beck, back in 2014, the Stephen A. Beck Jr. Achieving a Better Life Experience, that's where we get the acronym ABLE, was passed by President Obama. And this gave states across the country the opportunity to open ABLE programs and offer ABLE accounts, which made it possible for the first time for people to be able to save or have assets above $2,000 and not lose their benefits. I should say, gave them the opportunity outside of a special needs trust to do so. So it really was a very important piece of legislation, because prior to that, having that $2,000 asset limit can really create a cycle of poverty for people. Just do like to point out, when this legislation passed, it gave states the opportunity to open programs, but it didn't federally mandate that they do it, and it didn't provide funding for states to open these programs. So it took some time over the years to see ABLE accounts open. Here in Maryland, we launched our program in 2017, And we just celebrated our 5th anniversary, and I'm happy to say that we have a little over 5,000 Maryland ABLE account holders, most of them within Maryland or Maryland residents, but we do have a portion of our account holders who live outside of Maryland because we're open for national enrollment. And together they are saving and investing a little over $56 million. So that's really fantastic. We are one of 48 programs across the country that's open for national enrollment. So I just want you to know that ABLE legislation makes it possible for other states to have ABLE programs. So a lot of the things that I'm going to be talking about initially in the presentation are going to be things that apply to ABLE programs nationwide. All right. We here in Maryland are operated by the Maryland 529 agency, and we are actually section 529A in the Internal Revenue Code. So that's where you have our 529 in the IRS code, that's the college savings, and we're 529A for ABLE. We share an executive director and a board of directors as well, and our main office is located on Redwood Street in Baltimore, Maryland. So let's take a look at some of the main reasons why people open ABLE accounts. And the first one is because it increases the savings limit before those SSI cash benefits are impacted. So folks that were trying to save, they could only have up to $2,000 in assets. If they were to exceed that limit, they would be temporarily suspended from their SSI cash benefits. Unless they spent the money down within a certain time period, they would lose their SSI benefits, become disenrolled, and also they would be losing their Medicaid and related services. But with the ABLE legislation, it gave people the opportunity to save up to $100,000 in an ABLE account before it would impact those SSI cash benefits. The second reason is that not only does it protect those SSI benefits, but it's really going to also protect those Medicaid waiver services, things like food, energy, and housing assistance. And anyone that's ever tried to apply for these really important waivers, especially housing, you know that they can be very difficult to get. And we don't ever want to have someone lose their housing because they went over their asset limit. So it's also a great way to protect those other critical benefits. The other reason is that ABLE account holders do not pay federal or state taxes on their earnings, not while the funds are in the ABLE account or when they withdraw them, provided that they're using those funds to pay for qualified disability expenses. And we'll talk more about that in defining what they are. But basically, they are any expense that is going to support that account owner in his or her health, independence, or quality of life. So very broad definition. So ABLE funds can be used for a multitude of expenses. And the other is, here in Maryland, we have access to a Maryland state income tax deduction up to $2,500 per ABLE account per beneficiary. So for families, parents that are married and filing joint, they can claim up to a $5,000 income on their Maryland state taxes for funds that they contribute to an ABLE account, to a Maryland ABLE account. Also, ABLE accounts are popular because it's very easy online enrollment and account management. You can do it online, anywhere between 15 and 30 minutes. You have everything set up. And it's also an easy way to be able to access these funds. All right. So those are the main reasons that we see. Let's just talk a little bit about the eligibility to have an ABLE account. Basically, you have to meet 2 criteria. The first is that the person has to have a disability that was evident before their 26th birthday. Okay. So sometimes we see people that obviously they may be born with a disability and that we are aware of that right away, while other people may not receive their diagnosis until later in life. Sometimes we see this with people who are diagnosed with a mental health diagnosis, because sometimes those types of diagnoses aren't usually given until their adult life. But as long as someone has documentation in their medical file that those symptoms or that that diagnosis or disability was present before the 26th birthday, that's okay as well. I do just want to mention one of the changes that you may have heard about when the Secure Act was passed, pardon, the Able Age Adjustment Act was within that, and that was passed, and that has finally given us the ability to say, hey, we're going to expand the eligibility for ABLE accounts, because the criteria used to be by age 26, but now it is changed to folks that have a disability that was evident or diagnosed before their 46th birthday. The only challenge is this will not take effect until the year 2026, but it's something that ABLE programs nationwide have been advocating for and working on for many, many years, and we're finally happy to see that this is going to be taking place. But currently, still the criteria is a diagnosis or an onset, I should say, of a disability prior to age 26. The second criteria is that someone has to have a disability that meets the Social Security Administration's definition of a disability. So this can be evident in one of two ways. First of all, the person could be receiving SSI or SSDI, because we know if they're receiving this benefit, then they have been examined by Social Security and found to be eligible. The second way to show that you qualify for an ABLE account would be a physician's disability diagnosis form that is available on our website at www.marylandable.org. So this is something that is used by families oftentimes for a child that they have that's under the age of 18 who may not currently qualify for SSI benefits. They're able to print this form off and take it to the child's physician and have that physician select the disability code, and they just maintain that for their records. So one of the big myths that we have, again, is that people have to be receiving SSI or SSDI benefits to qualify for an ABLE account. I just want to do a little myth busting right there. That is not the case. They just have to have a disability that would meet the Social Security Administration's definition of a disability. And that would be proven also by that disability certification form that we talked about. A little bit about the ABLE account itself and who owns it. The ABLE account is always owned by the person with the disability. It doesn't matter whether they're 1 year old or 90 years old, it always is going to be owned by the person with the disability, and that person is also going to be the beneficiary, so owner and beneficiary. They are currently limited to having just one ABLE account at this time, and many of our over 5,000 Maryland ABLE account owners or holders are participating in managing their own account. They're able to do so. We do have a good portion of our account holders as well who need assistance for various reasons in managing their ABLE account. And in that case, an authorized legal representative can be appointed to help manage that account. This is my situation here. With my experience with ABLE, I am serving as the ALR or authorized legal representative for my daughter's ABLE account. So when people open an ABLE account for a minor, a child under the age of 18, they're going to have to automatically have somebody listed as the ALR because minors are not able to have their own financial accounts. So they will be able to just sign on as an ALR for a child under the age of 18. But let's take a look at account holders, people with disabilities that are over the age of majority. They're adults, 18 and over, who need assistance managing this account. So currently, the way things are currently is that a person can appoint an authorized legal representative by a power of attorney can be granted to serve over their financial accounts, and a person in the enrollment process could provide a copy of that POA showing that they're able to assist with their finances. The other thing that sometimes people do, families will be providing a copy of guardianship over property to show that they are able to manage this account. So the reason I say currently is because that's the way things are currently operating here with the Maryland ABLE program. But I do want to just let you know, pardon me, that the IRS or the Federal Treasury has published the final ABLE regulations back in 2020, and they have given us a couple of years to to implement some changes. And one of those things is an expanded hierarchy for those people who will be eligible to serve as an authorized legal representative for an ABLE account. So this, under these new regulations, first, a person with a disability can manage their own account. If they need assistance, they still can have somebody appointed to serve as a power of attorney. Or sometimes people are going to have guardianship papers that they would upload. But what's different about these new regs is they've added it so that if a person has a spouse or a parent or a sibling, a grandparent of that eligible individual, or a person serving as rep payee for them, they would be eligible to serve as an ALR for that account holder without providing guardianship or POA. So this is something that is going to be coming down the road a little bit, because here in Maryland, we have had to submit for some changes to the Maryland ABLE legislation in order to implement that change in our program, because the law currently says that anyone over the age of 18 has to provide consent for someone to serve in managing their finances. So we have some support that is from some of our legislators, and they're going to be presenting this bill before the General Assembly coming up soon. So I don't have a date to tell you when this will take effect, but please know that this is coming down the road. So let me stop right there for a second, because Jeff, we've covered eligibility and we've covered information about who can manage the ABLE account and who owns the ABLE account. So let's go back and just do a little check-in here.
Thanks, Kelly. Do have a few questions here, and we'll start with how many ABLE accounts have been opened in Maryland?
So this morning, I believe our number of this morning was 5,174 accounts.
Okay. And next question is, can rep payees now establish ABLE accounts?
So that will be something that they would be able to do in the future without providing consent forms. So currently, someone who serves as rep payee, they can open the ABLE account with consent from the person with the disability. And this could be provided in one of a couple of ways. First, you may have guardianship of that person, or secondly, that you may have power of attorney over property that you've consulted an attorney about and worked that out. The third way that's available, and this is what a lot of people have been doing when they're not quite sure what's going to happen in the future, they go onto our website at the www.marylandable.org website, and they go to the forms section and they download a form called the Limited Power of Attorney over the ABLE account only. And this is a form that was developed, you can just take to a notary, and you as the rep payee and the person with the disability, the ABLE account holder, would just sign it in the presence of a notary and two witnesses. And then you would upload that document, and that would be your consent to serve as ALR. But again, that's only going to apply to the ABLE account.
Okay.
That's a great question.
And when will those expanded ALRs be allowed to open accounts in Maryland? I think you alluded to this.
Yes, that'll be pending when the legislation is changed. But again, we are preparing this to go before the General Assembly. And I really can't say as to how long it takes that process to move through, but it is definitely something that has been in the works, and we are hoping to have that passed this year.
Okay, and one more here. Actually, one second here. Okay, one more. I think we might need to cover this pretty soon in the presentation. You'll be covering it soon in the presentation. Can you please highlight the contribution limits and triggers that regulate current ABLE accounts? I know you mentioned the $100,000 limit to not hurt Social Security and government provided assistance, but can you shed light on the account rules further? Thank you.
Absolutely, and that is a perfect transition. So thank you for whoever submitted that in the chat. We are actually moving into that now. So that's
okay, good. Thank you.
Okay, so let's take a look at things we need to know regarding contributions to an ABLE account. First of all, here in Maryland, if someone opens an ABLE account, it does require an initial deposit of $25 to open and fund that account. From that point on, the account owner or the ALR, it's up to them when they want to make future contributions. So you can set them up as monthly contributions. You can just do them a couple times a year. It's totally up to you, and the amount that you put in is up to you as well, as long as those deposits are a minimum of $10, minimum contribution of $10. So here, we see one of our changes that came in effect January 1st. They have actually increased the standard annual contribution limit to ABLE programs, to an ABLE account. So this is going to apply to programs nationwide. Last year it was $16,000. This year it has been increased to $17,000 annual contribution limit. And when I say that it's an annual contribution limit, that means whatever is contributed to that account, whether it comes from the account holder, family members, friends, anyone, the maximum amount that can be contributed to an ABLE account for the calendar year in 2023 will be $17,000. Do know that this will change from time to time. When we launched our program, I believe the annual contribution limit was $14,000. So as you can see, it has been increasing over the years. And this is actually tied to the federal gift tax exclusion rule. So whenever the IRS changes that amount, it's automatically going to impact the ABLE annual contribution limit for programs nationwide. So now that I've told you what that contribution limit is, I'm going to turn around and tell you the exception to the rule, because that's just seems the way we are, right? We have to have an exception, but in this case, it's a good exception. We have account holders that are working, have an ABLE account, and they may be eligible to contribute to an additional amount to their ABLE accounts. This year, that amount is $13,590 for people who qualify for able to work contributions. So if you look at it, if someone wanted to meet the standard annual contribution limit, anyone, family, friends, anybody could put money into an ABLE account up to $17,000. But an ABLE account owner who's working and qualifies for able to work contributions could put up to an additional $13,590 into the ABLE account. I'm going to pop forward to the next slide and let you see a little bit more about the Able to Work Act, which makes this possible. And what this says is that if a person is working and they're not currently contributing to another retirement account, whether it be a 401, 403, any of those types of retirement accounts, they could be eligible to contribute to the Able to Work contributions. It's still going to have some regulations, and that is that they can only contribute an amount equal to their gross income for that current year, up to $13,590. This is an amount that is going to change every year because it's tied to the federal poverty level of a one-person household. So every year this is going to increase by a bit. So let's just say, we have an ABLE account holder who's working part-time and they're earning $5,000. If they wanted to, they could contribute $5,000 to the Able to Work contributions. But let's just say a couple years down the road, they get a full-time job and things are going well and they get a salary increase and now they're making $20,000 a year. It would be capped to this year, $13,590. Okay, so that's how that works. The other amount that we want to keep in our minds is the $100,000 ABLE account balance. And this is the amount at which your SSI cash benefits for the account holder may be suspended. Okay, so once they reach that $100,000 balance, and if they were to exceed a $2,000 balance in an outside account, once they would go beyond that, what would happen is Social Security would put their monthly cash benefit into a state of suspension. However, Medicaid and any of those waivers will remain in place. This is a big difference between having $2,000 or more than $2,000 in an outside savings or checking account or any types of assets, because when you exceed that $2,000 resource limit in that scenario, what happens is you immediately lose your Medicaid and those waiver services, and then you're given an amount of time to spend down that balance. And if you don't do it within a certain period of time, then you are disenrolled from the SSI benefits and you'd have to start all over again. But within the ABLE account, you can have $100,000 in ABLE, up to $2,000 in resources outside of the ABLE account. And once you do reach that balance, however, that exceeds that, you will be put into a suspension on those SSI monthly cash benefits. Medicaid will remain, but at any point that person were to spend money down below and fall below the $100,000 balance, Social Security is able to reactivate your cash benefits because you were never disenrolled. You were in a period of suspension. So that's the main difference there. The other amount we want to keep in mind is the $500,000 account balance. Okay, so some people say, well, this doesn't make any sense. Why are you talking about a $100,000 balance and people could have their SSI suspended? We do have people that have SSDI benefits and they don't have that $2,000 limit, and they want to be able to continue to save and invest, and sometimes their account balances can grow beyond that $100,000, right? Once it reaches that $500,000 limit, that would be the amount at which we would no longer be able to take contributions to the ABLE account. It could continue to grow through savings and investments, but we wouldn't be able to take contributions at beyond the $500,000 limit. Unless the account balance were to fall below that, then you could start making contributions again. And this $500,000 limit is actually tied to the college savings plan, the 529 plan. That is their contribution, I'm sorry, their maximum account balance limit. So that's where we get that, the tie in there. So we've covered a lot here. Talked about able to work. Jeff, do we want to pop in and see if there's any questions about any of these things? Because they're kind of...
Sure, thank you. We do have a couple questions here, and let me jump to them. We have somebody that says, I've heard that it takes a little while for deposits to be posted and bills to be paid from the ABLE account. Can you comment on the normal turnaround time for this and anything in the works to change the turnaround time?
So I know that there's a couple of things that impact the time frame for the money to be posted to the ABLE account or withdrawals to be taken. These are online accounts that are linked to an existing bank account, a checking or savings account. So when contributions are made from one bank account to the ABLE account, it's not instantaneous. It does take a couple of days to see that money come into the account. When you're taking withdrawals, something that will impact that is whether a person has their ABLE funds being held in like the cash savings option. That is usually a much faster transfer or withdrawal and processing speed because it's just coming out of a savings type of account. Those who are using their ABLE fund for one of the investment portfolios, they actually have to contact Vanguard, have them say, hey, sell $200 or $500 worth of this, and then the money is processed back. So that is going to be a slower processing speed. I know that we have had some updates with our program manager that have increased the time of the contribution processing time. But as far as the withdrawal processing time, I think we're still at the same place with having those, investments sold, money transferred in. And so that's can take anywhere from 5 to 7 days, depending upon whether you've requested it over a weekend. So I always like to tell folks, it's not instantaneous. If you need money out of the ABLE account, allow yourself some time. But typically, if it's coming out of cash savings, it can be like around 2 days. Again, that's an estimate, but usually about 2 days is what I'm seeing.
Okay, thank you. That makes sense. Another question. I want to roll over a 529 Maryland College savings plan containing $140,000 to an ABLE plan. According to your slide number 9, the rollover would have to take place by December 31st, 2025, and the most I could roll over annually is $17,000. So I could only roll over a total of $51,000 from the 529 Maryland College savings plan. Is that correct? Do you think there's any chance Congress would extend the rollover deadline beyond 2025? I'm not sure what to do with the rest of the 529 Maryland College savings plan.
You are absolutely correct. Currently, there is a sunset date, as you said, of 2025. It is something that we are advocating for nationwide for this to be extended, but we have not heard anything yet. I don't know what the likelihood of that being is. I'm hoping. I mean, a lot of our advocacy efforts nationwide have been really focused on expanding the eligibility for ABLE accounts. So we've been working really hard on the ABLE Age Adjustment Act, which finally passed. So now we're able to thrust more of our efforts and advocacy efforts on to things such as extending the role of the ABLE Financial Planning Act. So I wish I had an answer for that. And you are correct, because the maximum amount that you can roll over is still going to be subject to the annual contribution limit, which again this year is $17,000.
Okay, thank you. And though we're certainly not financial advisors here at the firm, though we work with many, if you were to go online and research what to do with additional funds from 529 plans, there are certainly many different options that are offered to you as far as maybe some different things that you could do with additional 529 funds. So just something to consider there, along with speaking to a financial advisor. So let's try a couple more if that's okay, Kelly.
Sure, yeah.
So I am not familiar with the expenses and costs that come with a disability. I know it varies based on the type of disability, but given your experience, is the $100,000 a practical amount, and is this the trigger met very often? I guess that means do people bump into that amount very often?
Well, I will say that ABLE legislation was passed in 2014, and I don't think our first program opened until 2015. So if someone's able to contribute up to that maximum amount, which again started at 14 and then went to 15 and went to 16, we don't see a lot of ABLE account holders who have exceeded the $100,000 at this point. We do have some, but I know that people with disabilities, and I don't quote me on this, but I think in one of the reports I read, face an additional either 28 or 30% higher living expenses than does a person that does not have a disability, if I recall that correctly. So I don't have a specific amount that it costs, because everyone's disability is different, but throughout their lifetime are going to experience additional costs, living costs, that we would not have if we don't have a disability. So obviously, we'd like to see it possible for the maximum account balance to be able to one day be beyond 100,000. But again, that's not something that's going to happen right now. So it's a good starting point. The other thing is to remember that people do have the option of being able to create a special needs trust. that would allow people to put in any amount of money. There's no limit on the amount of funds that can go into a special needs trust. And actually, that is one of the things that I like to talk about when I mention this $17,000 annual contribution limit. It just brings to mind, so families who are planning and preparing for the future. I mean, a lot of people do start with an ABLE account because you can open it in 20 minutes and have it set up, and it's a great way to go. But we have to also think, if you're using the ABLE account as an investment account for the future, this is not going to be a good tool for someone who wants to be able to leave their assets to their children upon their passing, because people's estates are usually much larger than a $17,000 contribution. And that's where we really see that need for multiple planning tools. So for families that have a child or an adult child with a disability, a special needs trust is definitely something you want to consider. I know that the folks at Elville and Associates can talk to you about that. There's multiple types of special needs trusts. And that would be my suggestion, is to looking into that, so you can use an ABLE account and a special needs trust as companion tools. And certainly we do see a lot of people who have both for that very reason.
Okay, very well said. Thank you. One more question, is that okay? Okay. From one of our good CPA friends. Hi there, Tom. In the event of death of the ABLE account owner, how is money taken out of the account since the secondary beneficiary is not part of the setup of the account?
That's an excellent question. So here's what happens upon the passing of an ABLE account owner. If this person has a family member, a sibling, a step sibling, someone in their family that has a disability and has an ABLE account or qualifies for an ABLE account, those funds from the deceased ABLE account owner can be rolled over to the account owner that has a disability that's a family member. So that could be a direct rollover. Now, if there's a situation where someone passes and they do not have any family members who are eligible for an ABLE account, what's going to happen is it's going to first, any outstanding balances or outstanding expenses, I should say, outstanding expenses could be paid off through their ABLE account for any qualified disability expenses. And after that, those funds will become part of that person's estate. If they have an estate plan, a will that says my assets go to, such and such a person, those ABLE funds would be included in that estate. What would happen is the account would be closed, the funds would be liquidated and given to the person that is assigned in their will to receive their assets. But at that point, that person, if they don't qualify for an ABLE account, they're going to be taking what would be considered by the IRS a non-qualified disability withdrawal, because they don't have an ABLE account. People with disabilities are the only ones that can have ABLE accounts. So they would be able to receive the funds from the ABLE account, but now they would be subject to paying taxes on the earnings of that ABLE account. So there would be some tax implications at that point. The second thing that you want to consider, and a lot of people ask this, is that people want to know, when someone passes, does Medicaid recapture? Is there a Medicaid clawback for ABLE accounts? And here in Maryland, we have received a letter issued by the Maryland State Medicaid program that says that they will not seek recapture of funds for waiver services paid. They won't seek that from an ABLE account. However, the federal government has never said that they wouldn't do that. And keep in mind that whenever your family member is receiving waiver services, that those services are funded partially by federal funds and partially by state funds. So the state of Maryland says, we're not going to ask you to repay things from your ABLE account, but the federal government could. It has not happened, to my knowledge, in Maryland or in any other state at this point. I'm not aware of that happening, but they do reserve the right to be able to do that. And I don't know what will happen in the future.
Okay, thank you very much.
All right, so let's go ahead and take a look at who can contribute to an ABLE account. And this is a wonderful thing because anybody can contribute to an ABLE account, which is really nice. It could be the account owner, him or herself, family members, friends. It could be from earned income that they're receiving from a job. A lot of people put in economic stimulus payments when they were coming around during the COVID time period. A lot of people put those funds into the ABLE account. Unemployment funds can go in there. We can roll over money from a 529 account into ABLE. Small inheritances below that $17,000 limit, and small settlements. We also see people that receive large back payments sometimes from Social Security. So these are all different ways to fund the ABLE account, and how you can consider multiple sources of ways to take contributions on that account. Let's take a look at the ways that oh, wait a minute, I just want to make sure I did not skip past. I'm sorry, we're going to come back to this one since I accidentally skipped past it. But let's take a look at how funds in the ABLE account can be utilized. So if you were to look in our regulations within the IRS code section 529A, what you would find is that funds could be used for anything that supports the account beneficiary in his or her health, independence, or quality of life. That's how they define a qualified disability expense. Some people love this definition. Other people, it just drives them, out of their mind because they're like, I would rather have just a list of 72,000 things you could use your ABLE account for, and I could just look it up in a book. But that's not how it goes because everybody's disability is different. The IRS wants people to be able to utilize their funds, but they really just want to make sure that the funds are being used for the benefit of the account beneficiary and in ways that is going to support them in their health, independence, and quality of life. So what they've done is they've listed some categories to kind of help people think about things and get some ideas. But this is not intended to be an all-inclusive list, but let's just explore it a little bit. The first one is health, prevention, and wellness. So that's going to be our prescriptions and our doctor co-pays. Thank goodness I was able to use these ABLE funds to pay for my daughter's orthodontist, which was very helpful. But also think of wellness in a broader aspect. When we talk about wellness, it could be things like a gym membership or therapeutic horseback riding or swimming lessons. I mean, there's yoga, there's all kinds of things that really benefit a person in their health, their physical, mental, emotional health. Housing. This is an area that is the one area that the IRS is just super specific about this. You can use ABLE funds to pay for rent or mortgage or homeowners insurance or anything, adaptations to the home for anything like that. But if you're using it for rent or mortgage, you have to make sure that you take the withdrawal from the ABLE account in the same month that you're going to be paying that rent, or else let's just say you need to take $1,000 out, and somebody may say, well, I know my rent's $1,000. I'm just going to pull out $12,000 at the beginning of the year and just keep it in my regular checking account and write a check out every month. Well, then that would be considered an accountable resource now by Social Security because it's sitting in your regular checking account. So do be sure that you utilize those funds and access those funds in the month that you want to pay that rent or mortgage. Let's take a look at education. So this can be for a traditional college education. It could be for room and board and books. So that's why I often say, hey, if you have the 529, it makes a lot of sense to roll it over to an ABLE account. You can still utilize it to pay for college and all those expenses, but you can now also use it to pay for anything else that supports you in your independence and health, right, and quality of life. But it can also be used for tutoring while someone's in school, or any type of education or related equipment that comes along with that. Transportation, this is buses, trains, planes, Ubers. If an ABLE account owner is able to drive, they're able to purchase a vehicle with their ABLE funds. They can utilize the funds to fill up the tank with gas, right? Get new tires, get those oil changes. So basic living expenses are going to be things such as food and energy and utility bills and clothing, things like that. Assistive technology can be equipment, hearing aids, screen readers, but it's also your monthly cell phone bill because it is a communication device. Financial management, right, and administrative services. If you want any of these legal fees, professional services to financial planners and attorneys and tax prep, you can use the funds for those types of things as well. And also for final, burial expenses and final arrangements like that. They can be prepaid plans. So lots of ways that people can use an ABLE account. This is usually a topic that generates a lot of questions. So Jeff, I'm going to stop and see if we have any here.
Thanks very much. We do have a few. Let's see where they start here. Have there been any audits to verify the expenses are QMEs? And have you ever heard of any ALRs doing any unnecessary spending in ABLE accounts?
So I am not aware of any audits from the IRS to date. I'm not saying that it has never happened, but we've never heard of any. We wouldn't know if an ALR is doing unnecessary spending because we never actually see expenditures on the account. It is the responsibility of whoever is managing that account, whether it be the account holder, him or herself, or their ALR, to make sure that an expense is indeed a qualified disability expense. We don't ask you to submit those receipts or report to us, to Maryland ABLE, how those funds are spent, but we do recommend that you maintain your receipts, those supporting documents, whatever they are, receipts or whatever. In the event of an audit, the IRS is going to want to know two things. Number one, does this person with this ABLE account qualify to have this special tax advantage savings account that's intended only for a person with a disability with the age of onset before 26? As long as you have documentation, whether you're receiving SSI, SSDI, or you have that physician's form filled out that they do have the disability, that's going to take care of that in that audit situation. The second thing is they're going to want to know, how's the money being spent? They want to make sure that the money is being spent for the benefit of the account holder and beneficiary, right? To tell you the truth, the only comments that I've heard from the IRS about expenditures, and we've asked a lot of questions, the two things that they've had a hard no on is purchasing gifts for other people. Because again, this is an account intended only for the benefit of the person with a disability. People argue this all the time. They say, well, my daughter would like to buy a Father's Day present for her father from her ABLE funds, but no, they're very strict about only for the benefit of the person with a disability. The second is gambling, that they do not want people utilizing ABLE funds for gambling. But other than that, I've not heard them comment specifically about any particular expense because it really is very individualized.
Okay, very good. Thank you very much for that. And next question and last question for now, which I've been emailed, is two-part. And first part is, need help knowing how to objectively help to decide between a special needs trust and an ABLE account. And then a further message to me is, you mentioned you have a special needs trust as well as an ABLE account for your daughter. How does that work? And when might that be a good idea?
Okay. Well, in the interest of just the time, because I want to make sure I move through the rest of the material, Jeff, if you wouldn't mind just connecting me with this person and giving them my email, it's definitely something we can talk about a little bit more.
Sure. Absolutely. Yeah.
Yeah, I'd be happy to do that. So again, just maintain that documentation. No ABLE program will ask to see your receipts or report. You don't have to report to us, but again, be prepared in the event of an audit. And people aren't audited just because they have an ABLE account. You may get pulled for an audit just because you're lucky. So you want to be prepared to make sure you have those receipts for them, okay? All right, so let's talk about how people access money in an ABLE account. So with ABLE, they were really intended and set up to be online account management accounts. So you're going to link an ABLE account with an existing bank account, whether it be a checking account, a savings account that's with a federal bank, a savings and loan, a local bank, it doesn't matter. Whichever bank account makes most sense for you to link to the ABLE account, that's what you're going to want to do. You can actually link your ABLE account to up to 2 bank accounts. It might be maybe the account that a person receives their SSI, their rep payee account. You could link it to your ABLE so that if you wanted to transfer excess funds at the end of the month, you could move that over to ABLE. You could also have it linked to, the ALR's checking or savings account, because they may be the person that's putting money in and out of the account. So just something for you to think about there. That's how you're going to make contributions to the ABLE account. And it's also one method of taking withdrawals from the ABLE account. The other way of taking withdrawals is through our prepaid card option. You will see here on the slide that people can choose to make paper deposits of paper checks. We don't recommend it because you're sending things through snail mail, and it takes a long time, and the mail, we had problems with the mail during the pandemic, so we really encourage people to do it electronically, but it is something that is available if people do want to take paper withdrawals and deposits. There is an additional fee that is charged for that, as well as for the prepaid card option, there's a fee for that, but I do want to just share a little bit about that, because the prepaid card is it looks like a regular Visa that the account holder or ALR can use in the community or in line, but it's not a line of credit. It's a card that you're going to load funds from the ABLE account onto the card. So think of it kind of like one of those gift cards that you could purchase for someone. You're loading it for a specific amount, and then they're able to use it anywhere and not have to log into their account to take a withdrawal from their ABLE funds and transfer it back to their linked bank account, but it's a direct access to those ABLE funds, and it's very convenient for a lot of people. I know this is something that I personally have chosen to do. I can take a withdrawal from my daughter's ABLE account to pay for her summer camp by withdrawing it and transferring it to my linked checking account and paying for it, or I could sign her up for summer camp and provide Lily's ABLE account prepaid number, and it'll come right out of there that way. So that's a different, more convenient way for me to be able to do it. There is some other things about the prepaid card that people like, is that it gives you a chance to be able to monitor some spending. If you have a younger person that's learning how to utilize their card and make purchases, you can maximize the amount of the purchase for whatever limit you want, $25, $100, whatever you want to do. You can also, so you're putting spending limits on there in the beginning as they're learning how to practice in the community, budgeting some of their money that's on their card. It's been a very helpful tool. I know specifically for me, it's been a good financial literacy tool in helping to teach my daughter about how she wants to spend the money that's on the card. You can upload receipts for easy record keeping. It will provide you a report at the end of the month of where all the spending went, what vendors it was, and what types of expenditures. So that's kind of nice. It is $1.25 to get a card. You can get one for the account holder, one for the ALR, so it would be $1.25 a piece. I always say to folks, listen, if you're using your ABLE account just to put money in for a long-term investment and you really don't plan on accessing those funds all that often, it's not worth the $15 a year for the prepaid card because you're not going to use it. But if you are a type of person that's utilizing your ABLE account throughout the year or throughout the month, like I do for my daughter, it just makes sense for me because it's more convenient to access the funds. So it's just something to think about. This takes us into some of our Maryland ABLE features. We also have an online gifting page that I don't want to spend a lot of time on, but just tell you that it's a really great way to have family and friends support your family member in their savings and investment goals. This has been a great thing around the holidays. People don't know what to get someone. Send them a link to the gifting page. You can do it by text, by messenger, email it, and they can put in whatever amount they want from whatever source they want, and that money goes directly into the person's ABLE account, and they're able to take an income deduction on their taxes here if they live in Maryland, if they make a Maryland ABLE contribution. So that's a great thing. But I've seen this used in so many different ways. As a matter of fact, since the program launched, account holders, and I think there's a little over 400 of them who have activated their gifting page together, have received over $2 million in gifts in 5 years, because it just makes it so easy to be able to support someone in their goal. Someone may be moving out, getting their first apartment. They need to get furniture for that apartment. Hey, family and friends, so-and-so's moving out and we're looking for some support to get that place set up. So just lots of great ways to use it. So just something to think about. We also have a payroll deduction if someone, the account holder or ALR, is working and wants to make those contributions direct from their payroll, they can do that as well. But let me pop back here because we did skip over this and just mention to you, without getting into the weeds, because we're coming to the end of our time together, I want to make sure we have enough time for questions. But when you have an ABLE account, you have a choice of where you want to allocate your funds. Here in Maryland, we have 5 different choices. The first is our cash option. This is an FDIC insured banking product, very similar to a savings account, and whatever the federal interest rate is, that's going to be guiding what types of interest you're receiving on that cash savings option. A lot of folks like to do this because they want to put their money in their ABLE account. They want to know it's going to be there, okay? Other folks are like, yeah, you know, I'm opening this for my child. I'm going to use this for a long-term investment product. Just going to put money in there and take care of this. So there's 4 choices. These are investment options. They're managed by Vanguard. They have selected and created 4 different portfolios to choose from. They range in risk level, obviously. We've got a conservative, moderate, aggressive, and fixed income. Conservative is an investment portfolio made up of 80% in bonds and 20% in the market. The moderate is a 50-50 split between stocks and bonds. The aggressive, I believe, is 84% in the market and 16% in the bonds. And fixed income is 100% bond portfolio. So those are our choices. If you are interested in learning more about that, please go to our program disclosure book. It will tell you every portfolio, what it is made of. There's an asset-based fee. If you choose to go with that, it'll also tell you that because it's different for each one of those. But just know this, as we move on to the next slide, there are options, and you can change these options. Every time you make a contribution, you can allocate the first contribution to cash. The next time you make a contribution, you can put money into one of the investment options. So you're not limited to just one or the other. You can have a variety in your savings and investment strategy. Okay, so let's take a look here real quick. I want to mention again the Maryland ABLE tax incentive. Here we have for people making a contribution to a Maryland ABLE account, paying Maryland taxes, you can have you can claim or access an income deduction up to $2,500 per ABLE account per contributor. So folks married and filing joint can use a $5,000 income deduction, contribute that much. So to me, this is one of those things that's like, especially for families, for parents, you're going to be paying for your child's expenses anyway. So you may as well consider opening an ABLE account, putting those funds into an ABLE account, and then utilizing them throughout the year. And then you're taking an income deduction for what you were able to contribute to the ABLE account, up to $5,000 if you're married filing joint. So just something to think about. Account fees here are $35 for the year. And if there's the only other additional fees would be if you get the prepaid card, it's $1.25 per month per card. And if you have one of the investment strategies, there would be asset-based fees on that. Okay, so our fees are prorated and assessed quarterly. folks that are interested in opening an ABLE account, you can go directly to our website, which is the marylandable.org website. There's our program disclosure book. It'll get into all the details that we didn't have time to cover, all those little into the weeds details, right? You can read all about them there. Frequently asked questions are available, and all of those forms that I talked about throughout. When you go to enroll, you would do it directly from the website. And there's some things I recommend that you have handy. You want the social security number for the account holder and the beneficiary, the authorized legal representative. If you are serving as an ALR for an adult, have that paperwork ready, whether it's your POA over property that you have, or maybe it's guardianship papers for an adult dependent child. It could also be that limited power of attorney form, right? That's available on our website. So there's some things. And then be thinking ahead of time, what account do I want to link to my Maryland ABLE account? Have that bank account information ready, the routing number and the account number, okay? Once you're set up online, you have access to your funds, make contributions, take withdrawals, do everything online. We have customer support available to you if you want to learn how to do things like set up that gifting page, if you want to learn more about that. Customer service is available Monday through Friday, 9 a.m. to 8 p.m. at the number that's there on the screen. And this is just a little recap of the things that we talked about. But what I want to do now is just make my contact information available to you. I know anyone that reaches out to Jeff and wants my personal email, because that's not actually listed on my on the slide deck here, but I am always happy to help answer any questions that are specific to you or your family. Right? Happy to do that for Elville. They're wonderful partners for us, helping so many people learn about ABLE accounts. So we are happy to do that for them. But this is our contact information. If you want to attend another webinar in the future, if you want to refresh or something, go to our website, sign up for our newsletter. But you can actually access our events page through our website as well. So you can just see where I'm going to be next. Sometimes I'm out in the community. You're welcome to come to those. Sometimes they're virtual. Love to see you again. Most of all, just want to thank you guys so much for giving me this opportunity. And I'm going to stick around for questions.
Well, thank you as always, Kelly. Lots of great information. Appreciate all the updates. So we do have some questions I want to go ahead and run by you. And now would be your time to get those questions into Kelly. And if you do have a specific question related to your situation, all the hundreds of partners that we have here at Elville & Associates, Kelly is the best at being responsive and being willing to reach out individually to people. She is the best, and we really appreciate that about Kelly. So let's go ahead and get a couple of questions answered here. So please go ahead and get your questions in now if you have a burning question that you want to have answered. So first one, if we are approaching the first of the coming month and we know that the next monthly SSI payment will put us over the $2,000 limit, are we allowed to transfer some of the already accumulated SSI account into ABLE to ensure that the SSI account will not go over the $2,000 limit on the first of the month?
Yes. Yes, you are.
Okay. Long question, easy answer. Is there a mobile app for ABLE account holders?
Not with Maryland ABLE, we don't have one. There may be one program in the out of the 48 that does have it, but we currently don't have that. It's on our wish list, but we don't have one yet.
Okay. We all have wish lists.
We do, we do.
Is there a penalty to change investment options?
So there's not a penalty to change for the first two investment strategy changes that you make. But again, when you're making a contribution, you can add an investment strategy. But let's just say you were in conservative and then you wanted to move it to moderate, and then a little while later you wanted to move it back to conservative. That would be your two changes. But you could make it a contribution and add another one. You just can't keep changing the investment strategies around more than twice.
Okay. We have not a question, but a comment, she says. ABLE accounts and special needs trusts are perfect to be used in conjunction with each other. I urge parents and ALRs to speak with an attorney about why having both are terrific ideas. One doesn't replace the other. Okay. Thank you for that comment. I didn't pay this person to say that.
Neither did I.
But seriously, that is a very, very accurate statement. We get this question on every presentation we've done in person and through a webinar. You can comment further, Kelly. I'm not an attorney, but I can say special needs trusts are great planning tools, and ABLE accounts are certainly very important tools to have in the toolbox as well for families as well. Here at Elvon Associates, we are attorneys, of course, and we can help families with their full range of planning needs, which many times do include special needs trusts, which, as Kelly said, there are many of those. Which is the right one for you is a question that requires counseling and education, which we offer plenty of. We offer free consultations to help you with your planning needs here at Elvon Associates. So any further comments about that, Kelly?
Just two, and that is, yes, we see a lot of families who have started with an ABLE account and then added a special needs trust, or sometimes they have a special needs trust first and they want to provide some direct access to the person with the disability. So with the trust, they're not able to manage those funds. They have a trustee that does that. But like say for my daughter, for example, she has a trust. She cannot write checks from her trust, but she can get her prepaid card, go out into the community, make her purchases. She purchased her school supplies, very empowering. You know, I'm getting her to practice what life is going to be like, you know, in the future when she's, you know, when her dad and I aren't around anymore. I want to have her begin to practice and understand that cell phone she talks on every month, that's linked to her prepaid card. She's learning about these expenses, whereas it's a little different with the trust. But we need the trust because, again, when we pass on, we want to have a way to be able to leave behind our estate and our resources to our kids and not have them lose their benefits. So the second thing I want to say about that is when you go to, if you're interested in a special needs trust, I just want to caution you that I've spoken to families across the state. You really want a person, you want an attorney that specializes in estate planning for people with disabilities. It should not be a person that does divorces, taxes, car accidents. They'll say, oh, I'll set you up a trust. And a lot of times they're not the right kind of trust and people wind up losing benefits. So it really, really makes a difference. Find someone such as the folks at Elville that specialize in estate planning for people that receive public benefits.
Thank you. Very true. So next question here. They all run together. I need new glasses. I'm going on the 24th. I'm going on 24th for new glasses. Okay. Can an IRA be transferred into a Roth IRA within the ABLE accounts?
So money has to be, you can't put an IRA inside of an ABLE account. It would have to be the funds from the IRA could be moved into the ABLE account, but it would have to be liquidated, obviously, and then moved into the, so you don't have other investments under the ABLE account.
Can you roll over leftover 529 funds after used for college for a non-disabled child to an ABLE account for another family member?
I believe you're able to, as long as that person's, you know, if you're the owner of the 529 account, you can move the funds over to an ABLE account for, you know, the beneficiary. If the beneficiary is a family member of the person, I believe you're able to do that because they're a family member. You own the account, but does that make sense? If you're the owner of the 529 and the beneficiary is one child or family member, you can move the beneficiary to another family member, which would be the person with the ABLE account.
Okay, thank you. And comment from Peter, thank you so much for all you do. Certainly our pleasure here at the Elville and Able. Offering these webinars is one of our favorite things to do here, providing education, part of our mission here at the firm, and it's really our pleasure. Thank you for your interest in our presentations. Really appreciate it. This has been a wonderful webinar. Thank you very much, Nicole. Appreciate that. It has been a wonderful webinar, and we'll do it again later in the year. So if you have any last questions, let's get them in. As you do get those last questions in, I'll say just a couple things. I'll send out a follow-up email, as I always do, with today's video link. We've had a lot of people ask about that. I'll send that video link out. I'll also send out Able's most recent newsletter. I got that on, I think it was December 29th in my email. So I'll send that out to you as well, so you can see what the Able newsletter looks like. It's very comprehensive, very well done. As far as our webinar series goes, very briefly, as we round back in the form here, as the year's getting started, next Tuesday at 11, we have our wellness series, Relationship Changes in Retirement. It's an intriguing discussion. Monday the 23rd, we have the Essentials of Estate Planning and Elder Law with Steve Elville at 7 o'clock. So for those that are interested in evening presentations, that's one for you. On Wednesday the 25th, Achieving Perfection for Your Legacy, Intentionalism in Estate Planning, a topic that Steve talks about a lot, and he'll be offering. Also Friday the 3rd, kind of to go in conjunction with this presentation, what families need to know about planning for a loved one with special needs. And that'll also be offered by Steve at 10 o'clock on Friday the 3rd. So let's see if we have any final questions. Looks like we don't. So appreciate your interest in our presentations and our webinar series. Kelly, thank you so much for being here today. We appreciate you very much, as do our attendees here today. And it has been a pleasure, and we'll see you again soon.
Thanks, everybody. I appreciate the opportunity.
Okay. Thanks for being part of our webinar series, everyone. We'll see you again soon. Have a great day.